companies and others joining the junior stock exchange is a part of what I think Jamaican economy, Jamaican businesses need, in that, you know, we export relatively small amounts. Our economy itself is not growing at a really fast rate. Even before COVID, you know, we are ticking along at 2% growth and so on. And today we are, the per capita income of Jamaican people is the same as it was when we became independent 60 years ago. So our economy has not provided for the people of Jamaica. And the result of that is that the brightest leave us. I want to have a situation where companies become more aggressive, more dynamic, not just in exports, but in everyday business. And as part of that, I see that happening with companies who join the junior stock exchange. We see a transformation. You may not, if you're not on the exchange, you may not understand it, you may not see it. Why does it happen? You know, you are going along, you're relatively successful, and you join the exchange, and you have a bump in having 1,000 or 2,000 or 10,000 shareholders who are looking for you to deliver on your promise. You yourself are incentivized to make sure you achieve those promises. As a private company, you do what you want, you grow at the rate you want, but now you are visible to everybody and you actually uplift your own ambitions and desires. And whatever the value of your company was before the IPO, you see this huge jump in the value. You see the value of what you do as the profits go up and as the share prices go up. You see your own wealth, you see your family's wealth growing. And that is one of the driving forces. While Marlene said that some people view the exchange as a you said a fish fry, and of course there are real benefits. You know, if you're making 100 million profit a year, whatever the profit is, I just use that. The tax benefit for 5 years is $125 million that you otherwise would have had to pay to the government. That 125 is in addition to whatever your IPO proceeds are, and allows you to grow that much faster. So when I talk to you about this, it's because I saw it in my own company, and we're going to hear testimonials from other companies. There is actually no downside to being listed on the junior stock exchange. I can't think of one. But I know you are thinking of one, or you're thinking of two. And that is what we are here to talk about. What do you perceive as the downside of being listed? You know, some people I've heard say, but you're giving away, by publicizing your results, you're giving away secrets. Now, most of you, besides owning your own company, you are investors in the stock market yourselves, and you have shares in different companies. Does it give you any secrets that you can use? Not really. You know, published information is available to all, yes, but you're not giving away in that published information any trade secrets. You're talking more about strategy. And I can talk about strategy in my company, and maybe it will help people say, okay, I see the direction they're going, maybe I should do the same. But strategy and the implementation of strategy is an individual thing. You can talk about strategy all the time, but are you going to deliver? So nothing in an annual report puts you at a disadvantage in terms of information. Then there's the other issue of, I don't want people nosing around and telling me what to do. That means if I have my board of directors, they're going to try to get into my operations and second guess me and so on. Again, we will talk about that if those are questions you have, but the board of directors, if they're doing a good job, they're not trying to get into your operations. A CEO of a company, whether it is private or public, is the one who is accountable to the board and sets their strategy and implements. The board can only be there to to advise, to use their general experience. When you have an idea that you want to talk about, that's the greatest purpose of a board, to bounce ideas off of, to get views from people who are not in the company. And I found that to be very, very useful. When you go public and you have a certain amount of money, you may have chosen what you were going to do with it, or you may have the money sitting in the bank, and all of a sudden you have a whole lot of ideas coming up. How good are those ideas? How useful is it to spend 100 million? And you talk to your board and you bounce the ideas off them, and they will feed you. And at the end of the day, you make a better decision. And generally speaking, that's what I have found. They're not there to run your company, to tell you what to do. They're there to advise and to represent the shareholders as a whole. Before the IPO, you're 100% owner of a company, and you may give up ownership of 20%, you now become 80%. That 20% that you give up is money that comes into the business. So again, if you raise 100 million, that goes into the business and provides value to the business. So your 80% stake is in 80% in a bigger company. It's worth the same. In fact, it's worth a lot more, because all of a sudden, the shares have a value that you didn't have before. And you may be surprised to see how the shareholders value your company. When the last, when Spurtree went public, they were at $1, they ran to $3. You can imagine the impact on their value. As I said, I didn't say this, but then there is some cost associated about being on the exchange. You have to pay the fees to the JCSD. You have to pay JSE fees. You have to pay your board of directors. You do have to produce an annual report. But in general, those costs are not significant to the operation of the company. I have not seen where those become burdensome. They're not burdensome. There are some extra costs, but not significant extra costs. The way we deal with our directors, and I think a lot of junior market companies do, the fees are not typically that large. What we do is to incentivize them to be more interested in our company. We give them stock options. And I would say in our case, in the case of our company, it has meant a tremendous amount of financial reward to our directors and keeps them very interested. But in terms of day-to-day expenses, it's not a lot. Some of the information I'm hearing, some of the feedback I'm getting is that, COVID took its toll on a lot of companies. And today, 2022, 2021, we're not back to where we were in some cases before COVID. And some companies are worried that this is not the time to go public because our results don't justify a big price earning, a big multiple in terms of profits. So you may have seen, again, using the example, maybe before COVID you were making 150, 2022 you're looking at 100 million. But the issue is, as you will see from companies who have gone public, some of them didn't have a long history of profits, but what you do is you give a story to your potential shareholders. You say, listen, I'm looking for 200 million. This is what I'm going to do with it. I saw in my company the results for 2022 have dropped quite significantly compared to 2021. But I also know what are the things we are doing to make 2023 change. And in fact, we are going to do an IPO in January or February, but we are going to do it based on a story of what we are using the resources for, whether it is to pay off loans and save interest costs, whether it is for marketing expenses, whether it is for buying equipment. So investors are not necessarily looking at multiples of historic earnings. They're looking at multiples, well, they're looking at your story, and they're looking at multiples of the future. And of course, the fact that it's also tax-free jumps the multiple, because that's an expense that you're not otherwise going to incur. So don't be overly concerned. You work with your broker about not having a big profit in 2022. Work with your broker, prepare your story, make sure your strategy is logical and makes sense, and you will see there will be that demand. You also remember that a number of the companies that go public, they're not all new companies. Jamaica Fiberglass had been in existence for 85 years, since 1980 or 85. They themselves saw the need to change. They had been operating for 40 years a certain way. They wanted to do better. They wanted those resources. In going public, I would like our JMEA members to think about your other members and say, listen, I'm going to reserve shares for JMEA. You will find that you will get great support for your listing from your fellow members. Set aside some shares for your staff. Again, you find that we have been public for 12 years or 13 years. A number of ours, and we have done share offers about 3 or 4 times for our staff. Many of them have held those shares, and the increase in value has given them wealth towards their retirement or towards purchasing a house. They value that, and it keeps them closer to you, your company. Whereas before, your banks give you a tough time, because we know Jamaican banks are not the most friendly in terms of lending. Now, when you go public, they're really running you down. When you don't need it so much is when they want you. So you can thumb your nose at them afterwards, or you can borrow the money at a better rate. I also encourage you, when you're making the decision, to talk to as many of your fellow members who have gone this route, and talk to them about your concerns, and let them hear from them as to what they thought of before and what they thought of afterwards. And the last thing, when we went public, well, today we have our company. I am not the chairman, I'm the CEO, and that's been the case from the beginning. Some companies who go public, the principal owner maintains that position or retains a position as chairman, or you may have your own CEO, in which case it's logical that you would be the chairman. But don't believe that it's automatic, that you have been running your company for many years, you make all the decisions, you're not answerable to anyone, and so I need to be the CEO and the chairman. There is value in having someone who you trust to be your chairman and who you have to bounce ideas off. I have found it very beneficial. And I've seen the mistakes of the past, especially when we had our financial disaster in 1995, where a lot of companies in the financial industry made their own decisions, were their chairman, were the CEO, and they didn't listen to their boards and they made errors. That's why I've always advocated to have an independent chairman. So thank you very much. Please make sure when you leave today, you're better informed, and we're looking forward to a number of new listings. Thank you.
Thank you, John. One quick question for you. You spoke about the governance issue from the chairperson's perspective. What was the thought process? What did you have to consider in selecting, diversifying your board with independent directors? What considerations what did you have to consider in order to do that?
So in our case, first of all, I looked at people who I knew well and who I respected, and I chose some of those people. I also looked around at other companies and who were on their boards, and people who I knew, and public figures. So the person who is now our chairman and was our original mentor was John Jackson, and I knew him really, not well, but I was impressed by the way he talked, he thought. But I think that's the way to do it. You have good friends who you respect and who you think is going to have your interest. That is some of it, but some of it should be really independent people, whether they're people in marketing, doesn't have to be in your industry, people in finance, possibly lawyers, but I don't think lawyers add a whole lot, not that they're not valuable, but that you already are dealing with lawyers, and once you put your lawyer on your board, it kind of enforces the fact that you have to use them for anything you do, otherwise you have conflict. So I try not to put persons on the board who I'm going to be using all the time and could create conflicts.
Thank you very much, John. Any questions from the floor for Mr. Mahfood? I mean, we do have a discussion later at which you'll have other opportunities to do so, but if there are any questions from the floor, we would take them. Who has responsibility for the effective development and execution of the solutions that utilize innovation to drive opportunities for capital generation and value creation for their clients, including, but not limited to, capital raises, mergers and acquisitions, and corporate finance services. It's for 5 years and holds a Bachelor of Arts in Government, Political Science, International Relations from Dartmouth College in Hanover, New Hampshire. And Gabrielle Spence, Manager Investment Banking, coordinates and structures and analyze and execute deals including retail and corporate lending, capital market transactions, etc. She has been in the industry for over 6 years spanning accounting, personal banking, strategic planning, research, pension and retail, corporate and investment banking. She's a chartered financial analyst and holds a Bachelor of Business Administration with a double major in finance and banking and accounting, first class honors. Certainly, two qualified members of the Berita team, and we now invite Gabrielle and Candice to speak to us on the process of and the requirements of listing on the Jamaica Stock Exchange. Welcome them.
We can go down there, right? Yeah, thanks. Stand down, so stand. Can you make it stand? No.
Oh, sure.
All right. Not yet. All right, I think we're ready to go. Good morning, ladies and gentlemen, all protocols observed. Thank you, Mr. Mahfood, for that excellent presentation on the benefits of listing. Berita echoes a lot of the sentiments that you shared, and we stand prepared to assist the JME members in listing should they choose to do so. And so that's why we're here, really. On behalf of Berita Investments, Gabrielle and I would like to take you through the process and requirements of listing on the Jamaica Stock Exchange's junior markets. And we want to make sure that when you leave here today, you know for sure whether or not this is something that you want to pursue. So we hope that this presentation answers a lot of the questions that you may have. Yeah. Okay, well, there's a disclaimer slide that I'd just like to go over briefly. That information in this presentation is not an explicit invitation or for a recommendation to enter into any particular securities, investment, financial securities, or transactions. If you have any questions or need any advice in relation to the information presented here, please consult, Berita in our capacity as a broker and financial advisor, or your attorney at law, your accountant, or other professional advisor. All right, so before I begin and get into the nitty-gritty of the process and the requirements, I'm going to reintroduce you to Berita Investments Limited. So bear with me for the next quick 5 minutes. So Berita Investments Limited was founded in 1977 by an investment icon, Rita Humphreys Lewin, who is one of the first women to establish a stock brokerage in the Western Hemisphere and the first woman to serve as a chairperson for the Jamaica Stock Exchange and any stock exchange across the Caribbean. In 2018, Cornerstone Financial Holdings Limited acquired a majority stake in Berita, now one of the oldest stock brokerage firms listed on the Jamaica Stock Exchange, and began a transformative period in the company's history that has seen Berita become the fourth largest company on the JSE by market capitalization and the most prominent securities dealer in Jamaica by shareholders' equity. As you can see here, this was accomplished through a series of very successful public offers, which of course we are here to talk to you about and we can replicate for any of you who are interested in listing. In 2019, we had 2 oversubscribed rights issues. In 2020, we had the largest additional public offering on the Jamaica Stock Exchange, and in 2021, we had a second oversubscribed additional public offering. The last 2 are quite the feats because these would have taken place during the COVID-19 pandemic, and I'm sure you know the state of the industry at that point. So it was a signal that people had confidence in Burita and what we were doing. Burita isn't just a public offer guru. We are a full-service investment bank and a one-stop shop for all your investment needs. We offer local and international bonds, stocks, government papers, unit trust funds, pension and portfolio fund management, foreign exchange trading for all our exporters out there, and of course, investment banking. In 2018, after Cornerstone acquired a majority stake in Burita, we expanded our offerings to include investment banking, and this allowed us to raise capital, in debt via debt or equity, facilitate mergers and acquisitions, and offer financial advisory solutions to our clients. Equity transactions. As evidenced by Burita's several public offerings, we facilitate many equity transactions, including initial public offerings, additional public offerings, rights issues. We are also very aggressive in the alternative financing space and offer private equity, convertible issues, and a lot more. This year, you may have noted, Burita facilitated Massey's cross-listing, which was the largest of its kind in the region. We also offer various debt solutions to meet your financing or refinancing needs, and these include, project financing, bonds, bridge loans, and receivable financings, just to name a few. We also have a sizable and experienced brain trust, which I'm sure you've heard on our various YouTube ads. And this allows us to help our clients reach their strategic goals using market trends, insights, and financial analysis. All right, now on to what you're really here for, the processes and requirements for listing on the Jamaica Stock Exchange's junior market. Okay, so what makes your company eligible to list on the JSE's junior market? First and foremost, your company must be duly incorporated with limited liability in Jamaica or another CARICOM country. Second of all, your company has to be in good standing with all applicable regulators. So for JMEA members, this may be the company's office, the Bureau of Standards, JACRA, Trade Board Limited, and so on. Thirdly, a company seeking to list on the junior market must never have been listed on the main market of the Jamaica Stock Exchange or the main trading platform of any other exchange. And fourth, the company seeking to list on the junior market cannot have 20% or more of its shareholdings held by a company that is listed on the JSE's main market or the main trading platform over another stock exchange. Okay, so now that you know what makes you eligible to list on the JSE's junior market, we'll get into some of the other requirements. So first of all, constitutive documents. Most of you in here are business owners, and so you are more than familiar with your articles of incorporation, your certificate of incorporation. But it's very important that you have these as evidence that you are duly incorporated. Audited financial statements. Assuming that your company is not a startup, you need to have audited financial statements to demonstrate proper accounting policies and the company's historical financial performance. Gabby is going to explain to you a little later in this presentation why this is so important. And even if you aren't planning on a public offer soon or in the immediate future, it's still really important that you get this done. You also need to have an established corporate governance structure, which Mr. Mahfood touched on earlier. Corporate governance is the systems of rules, practices, and processes that direct a company's framework in its achievement of its objectives. So for the purpose of listing on the junior market, the Jamaica Stock Exchange requires at the very least that you have a board of directors. As Mr. Mahfood said, preferably this should be composed of members with various skills, perspectives, and experiences. And this will make for more sound decision-making for the company. You should also have an audit committee, which is a subcommittee of the board of directors who oversees the company's financial statements and reporting. Another subcommittee that you should have is a remuneration committee to set the terms and conditions of employment and compensation of senior management personnel who drive the operations of the company. And lastly, a junior market mentor. A company must appoint a JSE-approved mentor who provides relevant industry knowledge and advises and guides the board of directors on matters including procedures, systems, and controls for compliance, the company's growth, innovation, and just generally the overall strategy. The JSE is kind enough to have a list on its website of eligible mentors, but also there's an application that someone can fill out if they would like to be one. All right, continuing on with the listing requirements. In order to list on the junior market, a company must submit certain physical documentation directly to the JSE. This includes shelf documents, which primarily are composed of your listing application, agreement, declarations associated with listing. Second, probably one of the most important form of legal documents for a public offer is a prospectus. And the prospectus gives prospective investors information and details about the investment offering. And finally, you have the resolution. The board of directors has to have a resolution approving the company's intention to list. Other requirements to note, and I believe Mr. Mahfood also touched on this. The minimum amount of share capital that can be listed is 20% of a company's issued share capital. So if you have 100 shares, the minimum that you can list to be on the junior market is 20. So that would mean you're making 20 shares available to the general public. It should be noted again that this 20% must be taken up by 100 additional shareholders. So it can't be made of 100 shareholders, including shareholders prior to the public offer. It has to be 100, a minimum of 100 new shareholders. The minimum value that can be listed on the stock exchange, on the junior market stock exchange, is 50 million. So if we do some quick math here, if you are raising the minimum of 50 million and you are putting up a minimum of 20% of your shares, you would have an estimated market cap or valuation of about 250 million. So that's something to bear in mind when you're calculating when you're doing your valuation of your company and preparing to list. The maximum that you can raise on the junior market stock exchange is 500 million. Hopefully just for now, Mr. Mahfood. And again, if we do some more quick math, if 500 million represents 20% of your share capital, the minimum, then the maximum valuation that you can have would be about $2.5 billion. Mrs. Street Forest, we'll have a discussion about these maximums later. And lastly, and I'm sure this is definitely not least, is that you guys are concerned about the fees. How much is this gonna cost you? I know it can seem very daunting, all of the expenses, but we're here to just give you a brief overview of what it might entail. And just to echo again Mr. Mahfood's sentiments, negotiating is a major part of this. Right? So you have brokers like ourselves that are willing to, discuss alternative methods of payment, not necessarily cash, but maybe kind. If Barita is doing a public offer, that is a signal that we believe in our company and we would want to take a stake in it ourselves. So here are some of the initial fees for listing on the junior market. So you have to have, there's an initial annual listing fee that is based on the company's market capitalization. You can see down here in the table that if you have under 100, if your company is valued below 100 million, then it's about 233,000. If it's over 100 million but less than 900 million, it's about 467,000, apologies. And if it's over 900 million but less than 5 billion, which it should be based on our quick math that we did not too long ago, then it would be about 876,000. So this is a fee that you would pay at the outset when you're first being listed, and then this is something that would be due annually thereafter. There's also a fee for the JSE to review your prospectus. Now, the prospectus, as I had mentioned before, is a very important legal document, and it can be very long, 70 pages, and Gabriel is going to take you through that in detail so you know exactly what you need to include in there. So you have to understand the JSE is spending significant time going through your prospectus. You have to give them a little something. So it's $36,000 to review the prospectus. It also costs an additional $30,000 to have the prospectus uploaded to the Jamaica Stock Exchange. And by uploading it to the Jamaica Stock Exchange, you're making it available to all prospective investors, which is what you want when you're trying to go public, to maximize your shareholdings. You also have an ISIN, which is an International Securities Identification Number that is unique to your public offer, and the cost of that is $160 US. And then finally, you have to pay about $4,000 for the physical strip that Mrs. Street Forest and her team will place on the board when you are officially listed. And so I should mention that these are just the costs associated with the Jamaica Stock Exchange. As Mr. Mahfood mentioned, there are other costs associated with engaging an arranger, a broker, selling agents if applicable, your attorneys. Talking for a while, so I'm going to hand over to my colleague Gabrielle so that she can take you through some of the processes and more in depth in the prospectus.
Thank you, Candice. All right, so Candice would have taken you through the real mandatory requirements and the eligibility to get onto the junior market. But realistically, there are other things that you'd need in order to prepare. And in order to make the process as seamless and as quick as possible, right? One of those items is company due diligence documentation. So you're a business operating in Jamaica, you must have a bank account. And you know all the requirements to open a bank account. And if you have an investment account, it's the same thing. So you would have already had these things. For example, your letter of good standing, your TCC, your most recent annual returns, right? As prudent investment bankers, we have to ensure that we're bringing a fit and proper business to the market. Next is a documented strategic direction of the company. So as business owners, of course, you know, we have our direction in our minds, we have our ideas, we know where we're going. However, a lot of the times we don't have it fleshed out on paper. So exactly where it is that you want to go, what exactly is it that you need to achieve? What steps do you need to put in place to achieve that? What kind of financing do you need to achieve that? And of course, what would the bottom line look like when you achieve those goals in whatever timeline you've stated? Next is the 3-year to 5-year financial projections, and this really supports the strategic direction. So when you get this money, when you achieve this financing, what is your bottom line going to look like 3 to 5 years down the line to show investors, you know, that this is actually a viable equity investment that they can make. Now, not to say that if it is that you don't have this fleshed out as yet, we won't assist you. We will definitely help you to flesh these out and get it ready for you. However, just to say that this is something that we can start with. Just have something for us to start with. If you don't, we can also help you along the way. However, this would make it much faster. So if you do have it prepared, we'll of course consult with you, tell you, realistically, based on market trends, we think that X can be adjusted. Or when it comes onto your strategic direction, we say, we can flesh this out a bit and build this out. So that's just some supplementary items that would be good for you to prepare beforehand, right? So next, we're moving on to the road to IPO. Now, a lot of persons, as Mr. Mahfood said, believe that this is a very daunting road. However, with Barita by your side, we'll hold your hand step by step. At no point in time will you ever feel too stressed out or you're doing this by yourself. We'll always be there to guide you and lead you through the process, right? So let's get started. All right, first thing, I'm going to take you through a high-level process, and then I'm going to give you a realistic picture of what it will look like, a realistic picture and timeline of what the road to IPO would look like. So high level, first things first, you engage your transaction advisors. So you say, Gabrielle Candice, I want you. You are my broker of choice. Let's get this done. I'm ready. I have all the requirements. Let's do this. So you engage your lead broker and arranger. You have to engage an attorney, a mentor. You'd have your auditor already, of course, and a registrar. So being in the industry and, this is what we do, we'd, of course, guide you along this way as well. So there are attorneys that specialize in capital market transactions, and we'd guide you to them. There are mentors. There's an approved JC Junior Market mentors list that we would guide you to. And the registrar, of course. JCSD is an excellent registrar, but if for whatever reason you don't choose to go that route, there are other approved registrars that you can consult with. Next, we have the drafting and submission of the prospectus. Now, a lot of people believe that this part of the process is the most daunting part of the process. However, as I said, you'll have a team every step of the way. So the prospectus is a pretty large document. It's a legal document, and it is what prospective investors will use to make their decision to actually invest in your company, right? So considering that is such an important document, of course, it's going to be subject to some regulation. So we would have to submit this prospectus to the FSC, Companies Office of Jamaica, and the JSE. FSC and COJ needs it at least 30 days prior to when we intend to list, and the JSE 21 days. All right, so I'm going to tell you a bit more about the prospectus, so you can have an idea of, what it is made up of, if you haven't seen one. Whenever a company is coming to the market, they have to publish this prospectus. So they're always available online. However, we actually brought some hard copies here of the Diamond APO prospectus, so you can actually look through as I go along. Rawl right here has them. Rawl, you can always distribute. So I'm not going to take you through everything, but just to give you an overview of what it is. So let's start with the professional advisors for the invitation. As I said, you come to Barita, you say, okay, Barita, lead arranger. Then you would, of course, have to list your auditor, your registrar, your attorney. Next is the letter to prospective investors. Now, this letter is usually done by the chairman of the board and the CEO. And this is really where you get to speak about your company, speak about your history, how did you get to where you are right now, your track record, what your vision is for the company, and what you're going to use their money to do, and why you believe you can actually get this done. So that is the letter to your prospective investors. Now the invitation. So the invitation is going to speak about, how much shares you're offering, the pricing of the shares, the different pools. So you have the reserve pool, you have the general public pool, as Mr. Mahfood, probably a reserve pool for the JMEA members, etc. And the invitation would also tell prospective investors how they can apply, the timelines, when it's going to open, when it's going to close, all of that. Next, you have the use of proceeds. So let's say you're raising 500 million, right? Investors want to know exactly what it is that you plan to do with their money. So, for example, let's say you're going to acquire another business, or you want to expand, you want another branch, you need to acquire a warehouse, or you need equipment. You are going to outline exactly how much, well, not exactly, an approximation of how much you're going to put towards that specific goal. So, expansion, 100 million, working capital, 50 million, acquisition, 250 million, transaction fees, X amount. So right there, you'd outline exactly how much you intend to give to each aspect that you're planning to use the proceeds for, right? Okay, so next you have the information about the company. And here it is where you give, again, the history of the company, the track record of the company, your vision of the company, and very importantly, the business operations. You give some insight into the business operations. What drives your revenue, right? As Mr. Mahfood said, you're not going to give trade secrets here, but you are going to tell them, what are the different business lines and exactly how you generate revenue, right? So you're not going to tell them, how you mix the concrete, who is your supplier, why your expenses so low. No. You're just going to tell them your different business lines. Next, we have the share capital structure. So you're going to have to tell investors what your capital structure is right now, and after the IPO, what you expect it to be. So that's very straightforward. Dividend policy. So of course, equity investors want to know if they'll be receiving dividends, or if you intend to have dividends, to pay dividends throughout, as long as you're listed on the JSE, right? So here you'd state, okay, each year I intend to pay out around 50% of my earnings in dividends, right? You just state your intention there. Next, we have the auditor's report. We all know what the auditor's report says. You get an unqualified opinion. The board of directors of the company and their interest in the company. Now, this is where you get to showcase your collective board of directors, their collective knowledge, credentials, experience in their various capacities. And they are going to have to show how much interest they have in the company. Just to note, going forward as well, that is the standard. So the board of directors will always show how much shareholding they have in that company. Then we have, this is a very important part, the presentation of current and historical financial information. So here you'd present anywhere between 2 to 5 years of historical audited financial. Very important. I know I said that a lot, but this is actually very important, right? So you are presenting around 5 years historical financials. In the management discussion and analysis, you're going to tell your prospective investors exactly why the financials look this way. So, for example, why has your revenue grown 100% over the 5 years? Why are your expenses remain the same? Why is your bottom line, why is your net profits growing so much? Why are your margins improving, etc.? So you're just going to look at the trends, and you would make some commentary on why it is the way that it is, or what happened during that period. And then the risk factors. So the risk factors is pretty straightforward. It is all the risks that are associated with your business, your industry, and just risks associated with holding equity overall. That's it. All right, so that's enough about the prospectus. back on the road to IPO. So far you've engaged your transaction advisors. You've drafted and submitted your prospectus and you got, the approval to register that prospectus. Next, we would engage selling agents if it is applicable. Depending on the size of the offer, we would engage selling agents. After that, we publish the prospectus on the JC. And that's when the real fun begins, right? So that is when, after we publish it, that's when we start all the public relations. Mr. Thwaites, what is his story? What is his business about? What is his track record? What is the vision that he has for his company? So we would really go there, touch base with our expansive client base or network of institutional investors, and put you and your brand out there. Then the offer opens. The offer usually opens after 7 days between the publication of the JC. The prospectus. And then after the offer opens, you have the selling period. So the selling period is usually a maximum of 40 days. And then the offer closes, right? So as I said, it's 40 days, and then the offer closes. After the offer closes, we have some operational procedures that we would take care of, and that would include the basis of allotment. So that is where we'd say, okay, all the applicants in the reserved share pool, for example, gets 100% of whatever they applied for. And the general public, again, just an example, got 50% of what they applied for, and so on and so forth. And of course, we'd have to do refunds if it's oversubscribed. And simultaneously, we'll be doing our application for listing with the JSE. And after that application is approved, we then come right back here to the JSE where Dr. Street Forest will warm. Right, now I'm gonna give you a realistic picture of what's gonna happen as soon as you step through the door of Barita and say, all right, I'm ready, let's do this. So, first things first, you meet us today, right? And then thereafter, you say, all right, Gabrielle, Candice, I'm ready. What is next? What is required? So we'd start by having our kickoff meeting. Now, in our kickoff meeting, what we'd really do is just to have a discussion with you to get to understand your business a bit deeper, right? What exactly is it that you want to achieve by listing? And then you'd also share certain things about your company. What's the structure? And here we'd also give you feedback, strategic feedback, right? So is your structure appropriate to list on the market right now? Based on market conditions, based on what's happening in the market right now, is this really a good time for you to list? And then after that, assuming that all is well, we said, all right, great, let's do this. We move on to commercial and legal due diligence. Now, this involves many things, but I'll just go over a few. One thing on the commercial side, we'd of course look at your historicals, your projections, based on your strategic direction, right? And we would say, all right, we think that, this is a good company, we see where you're going and we think you can get there. You are going to list and you're going to offer shares. Those shares have to be priced. Therefore, your company must have a valuation. So that's the next step. That's the next hurdle to cross. Doing a valuation for your company. I'm not going to torture you with the valuation methods today, but when we get to that point, of course, we'd walk you through step by step on which method we believe is the most appropriate for your company and for your industry, right? And you would have a deeper understanding at that point in time. And of course, legal due diligence. So, of course, being prudent investment bankers, we have to carry a fit and proper company, or we want to carry a fit and proper company to the market. So we would do significant legal due diligence during this point in time. All right, so October is done. Then moving into November, right? So next step is to determine the transaction structure. What exactly it is that you want to get from this IPO. Do some shareholders want to sell? Are we going to do an offer for sale? Or things along that line. So here we determine what is the structure of the offer that we're doing. Next, by this time we would have agreed on, pricing, shares, structure, everything. Now it's time to, this will of course be in consult. Those 30 days, realistically, what we'll be doing is, going back and forth with the bodies to clarify anything that they may need clarification on, and so on. Now, after we get that approval, what happens is that we publish that prospectus, right? So when that prospectus is published, hold on. Yeah, so when that prospectus is published, as I said, that's where the fun begins, right? So then you have the public relations and the marketing. At this point in time, we'd really go out into the market. We'd flood the market with you, your story, your brand, your vision. And we'd also be touching base with our institutional clients or retail clients once it fits their investment portfolio, and just getting you out there. And I mean, you've seen us do this several times over with Dermon APO. I don't know if you guys remember when Dermon was having their APO, that's all you saw in the media consistently until it was closed. Same thing for Massive, same thing for Barita's APO. You couldn't watch anything without seeing Barita. You couldn't watch anything without seeing Therese. You couldn't watch anything without seeing Paul. So that is what we want to do for you as well. Then after it's open, you have the selling period. And as I said, the selling period can be up to 40 days. However, I just put it as 2 weeks. It can open and close. We've seen that happen many times as well. So realistically, if you start today, we can get it done by February. It can be shorter than that, depending on how ready you are and all the things that you have in order at that time, or it can be a bit longer. It depends on so many different things happening at that time. And after the offer closes, now with Barita. And I'll give you just 3 things. First thing is that Barita wants, the companies that Barita takes on is to be their strategic financial partner, not just a broker. So let's say you come to us today, Mr. Thwaite, you're not ready to go public yet, right? Let's say you're not ready to go public yet. However, you have something that you want to execute now. We'd say, okay, we can do some debt financing for you. Or probably if that's not suitable, we can do a private equity injection. Or something is our marketing and sales team, right? As I would have alluded to before, when Dermon's APO was happening, it was remarkable. It was really something to behold. Everywhere you looked, you understood what Mr. Cottrell was. Barita's IB team really started in December 2018. And since then, we've raised over 90 billion Jamaican dollars. And we want to do that for you. So Mr. Mahfood covered the benefits of listing on the junior market. Candice covered the eligibility and the requirements for listing on the junior market, and I gave you the process for listing on the junior market. So if you have any questions, please feel free to ask. And, our team stands ready and willing to assist you. Thank you.
Thank you very much for that very comprehensive, detailed, and thorough presentation. If you think the young people didn't know anything about listing on this exchange, every broker has 2 just like this, at least. Very good presentation, ladies, and we thank you for it. Are there any questions from the floor? Yes, Richard. Come for the mic. What was the question, Richard?
There have been several oversubscribed listings recently. Other than refunding investors, what other options are there?
Okay, thank you for that question, Mr. Cole. So there is an option to upsize up to 50%.
Yeah, but just to add, if you don't want to end up with the cash that you intended to invest, you can speak to your Barita advisor, and they will walk you through all the other investment options that we do offer to our clients. All right.
Thank you, Raul. Question at the back?
Thank you. Good morning. As it relates to startup companies listing on the stock exchange, I'm guessing it's possible. You mentioned that there was some wiggle room concerning audited financial statements. What is the process for bringing startups onto the stock exchange?
The process for bringing startups onto the stock exchange.
Okay, thank you so much for your question. In the case of a startup, you would, of course, have to provide your projections. There have been, but not that many. Well, not to discourage you, you can provide your projections. And, you know, when you're providing your projections, you're showing that it's not just an Excel sheet with figures out of the sky. You actually have taken steps to achieve or to come up with these projections. So let's say, for example, you have executed contracts that you have in place, and now you just need the capital to execute. And you have a fair idea of what the expenses related to it will be. You have your suppliers lined up, and you can show it. So, yeah, that's my answer. Team, you'd like to add anything? Okay, great.
Go ahead, Jason.
Just a quick question to you guys. I didn't see where if you want to share some more about the breakdown of Barita's fees as the investment advisor, the broker. I don't know if you wanted to speak about it, but it's something that I think we all would have questions around.
Thank you for that question. I know probably a lot of persons were thinking it, so very good question. So as it relates to brokers' fees, right? Candice also said it, so there are different ways that we take payment. It could be a percentage of the raise, and that would, of course, come out of the use of proceeds. Or we could ask for, a certain reserved amount of shares, or we could ask for a certain stake in the business, So, it's very subjective. We can negotiate. It all depends on what's best for you at that time and what you can work with. All right?
Thank you
Any
very
further
much.
questions? Okay. Yeah. Percentage, yes.
So I'm advocating for you, but the brokers are flexible. As I said, I spoke to one big broker, 0 fees, but he wants some shares in the reserve pool. All of the brokers generally would want shares in the reserve pool. And in a way, there's a positive to that. It reduces the amount that you have to raise on this open market. The negative to that is that when you go public, you want as many shares traded as possible. You want the maximum number of shares in people's hands, because typically the brokers and their institutions tend to hold on to those shares for their own investment purposes, and they don't trade. So it's a balance. The balance is the risk of having it open to the general public versus the risk of tying up a lot of shares that are not going to be traded. But generally, you will find that most brokers will be very flexible in how they charge their fees. There is a total fee when you add the lawyer, when you add the broker, when you add the JSCSD, I think it's in around 7% of the total IPO. Sometimes it can be greater, but I would say if you shoot for that figure, it's not an unreasonable figure. But you have to, as I say, you have to shop around and talk to everybody.
Thank you very much,
Thank you,
John.
Mr. Mahfood.
Thank you very much. We will have 93 and survived quite a few financial meltdowns and has now grown into one of the major importers and distributors of electrical products in Jamaica through the Fosrich group of companies. Ladies and gentlemen, I would call him the reigning king of the junior stock exchange. One of the better performing companies on the junior stock exchange in the last 12 months. Longtime friend of the Jamaica Stock Exchange. I would ask you to welcome Managing Director, Mr. Cecil Foster.
When somebody speaks like that, you must know that he's my neighbor. There's hardly any truth to anything that he says, but the fact that he's my neighbor. Mrs. Marlene Street Forrest, Mr. John Mahfood, and all other distinguished persons here today. I am standing here representing an organization that I'm very proud to represent. Just to speak of the company called Fosrich and the people who represent the company. It's an honor and a pleasure to do so. I was asked to just share with you a little of my journey, of the Fosrich journey. And my neighbor just mentioned that the company was owned by the Fosters. That's Marion Foster and my December coming will be 5 years. The journey is very difficult to explain to you, but my friend beside me told me before I came up here that I must give them the truth and nothing but the truth. And so I'm just going to lay it there. I had trepidations when I first thought about going public. I regard myself as very private, and I've had encounter with a very wonderful lady by the name of Mrs. Street Forrest in my office years before, and we had discussions as to what we could do. I've had brokers come and sit with us and share with us, but we just never moved. I can tell you, and I'm going to say this, Mrs. Street Forrest, I laughed at Mrs. Street Forrest, and when I finished laughing, I was embarrassed. In 2017, at the conference at the Jamaica Pegasus, the Regional Economic Conference, she was introducing me to somebody. I think it was the chairman of the stock exchange, and she mentioned in that January that by the end of the year, this gentleman, Fosrich, will be listed on the stock exchange. And I laughed. Even when I was sleeping the night after, I was still laughing. I said, it will never happen. We were just coming to the end of our 5-year plan at that time, and we were now looking at the next 5 years. And so we forgot maybe that we needed to look at the financial partner that we need to help us to take us to where we want to go. Maybe that wasn't on my mind at the time. But before September, things changed, and we looked and see where we wanted to go and how we're going to get there. And one of the things that that came strongly to me is that all the companies that are doing well in Jamaica, most of the companies, that you see doing well in Jamaica are publicly listed companies. The banks, the near banks, and the other companies, they're all doing well. And I said, they have gone public. And then I look at Facebook and Microsoft and Google, and I said, but all these guys started out in their their garage and so on, and they are doing well. Why am I afraid of opening up my books? And I think I had a good book at the time, but I just didn't want people to know. I got over that. And when I told my family and then my financial team that we're going to go public to raise funds that we could raise on the stock market, they were kind of surprised. But the decision was made. And the journey, when we all of what you hear Barita and John and other persons speaking about, these are true things. But what was very significant is when we sat with our attorney and the team that was taking us there, the first meeting, they said at the end, this is going to be an easy one. So I said to Andrea Kinash at the time, what do you mean? He said, you have almost everything ready. Because we were trying to operate a particular way leading up to that point. And so they took us public and we raised a couple $100 million. But what happened after that? I couldn't believe it. We gained so many friends, banking friends. They were all calling, and I was saying, Peter, how do I manage this? Raul? They were all, and I'm saying, Peter said, that is what Peter worked with Sergio Gore for years as Mr. Biles' financial director. And so he knows, and he said, listen, this is what's going to happen. I became more willing to manage these relationships because you can't go to all of them. And we were able to look at how we can tap the market for other financing in order to go to where we want to go to. I'm jumping because I'm going to make it as short as possible. What I saw also in my team when we went public was amazing. The team, the individuals who were managers or just ordinary, you call them ordinary workers, I call them team members. They expressed and start to show a level of pride. It was unbelievable. Let me jump to this. Let me tell you, I am coming down a while ago from my office. I decided to walk through my warehouse. I'm coming down. I walked through my warehouse. When I got to the ground floor, just coming here, I saw this guy sitting down, his two legs on, chair, and on his lap, he had his laptop. So I said, boss, what happened? You all right? What happened? You playing games? And he said, no, sir, not playing games. I said, what are you doing? I'm checking my stocks. I laughed all the way here. The guy, he is one of the persons who takes care of the grounds of the warehouse. And he was checking his stocks. I said, what happened? He said, I bought some more recently, sir. And I'm checking to see, how things are. I said, maybe you could do that at lunchtime. Oh, it was something else. No. Going public also gives you a chance to, you are now attracting better talent. People want to work with a company that they can see more transparency from what they do and so on. International, whenever we speak, we have brands like, I didn't tell you about Fostridge. We are in the electrical space. We are distributors for a number of brands. Some of the brands we make ourselves, not in Jamaica, sorry to say that. Some of our brands like the Trust brand, the Fostridge brand, the MGF brand, and so on, we make them outside of the country. But what we are very proud about is that since we have gone public, we have gone into manufacturing of PVC conduits and pipes in Jamaica. I Right now, we are employing 80 persons in Clarendon to manufacture the second part, pipes in the second part of our expansion. We are doing sewer and infrastructural pipes in Clarendon. We were able to do all of that because we could tap the market for financing. It's a lot of investment. We have spent almost $750 million in doing that. The smaller plant is in Kingston, and that larger plant is in Clarendon. And we see, I'm trying to give you a global look. We see where it is an amazing ride so far. We listed at $2, and today it's not $4, it's $45 because we split. We had a 10-to-1 split, $45. I have something to show you, just to tell you that I don't think you should be too afraid of making that decision, because the decision, this thing has turned off. And I didn't want to mash up your program by coming down, and Mr. Neighbor, by coming down and using, I didn't want to mash up your program by coming down and, yeah. So we have a number of positives. I can't tell you where there is a negative. The only negative that I see is the fact that too many people know me now. But, and so going, I don't know, the first slide is up there? The first slide is up there. We moved, if you look at the revenue trend, we were in 2015, $947 million. We went to 1.156 in 2016 and $1.046 billion. And then we went to 1.29, 1.6, and then 2020, we 1.896 and 2.35. And this year, we are going to be blowing all of those things out of the waters. We are going to be growing by 58% this year, so we almost will be $4 billion. What has made the difference is not just the availability of financing. It is the people who we have at Fosrich. We laid a plan, a foundation, and then we decide that we are all going to be responsible for managing the plan. And we have recognized that when you have a plan and you have good management, then you need to finance it. And that is what I see a lot of our people might need to do. So the next slide, I don't have it here. I wonder why this thing is going off on me. Okay, I'm getting it. Okay, when you look at also the gross profit, the next slide shows you the gross profit is moving from 363 to 469 to 473 to 534, 740 or 710, 822, and it was $1 billion last year, just over $1 billion. That's our gross profit. And it is just in a few years, less than 5 years. When you look at the profit after tax, it was only a measly $3 million in 2015. And look where it's at now. It's at, up to the end of last year, it's at $199 million. I show you this because this year, even in a pandemic year, the company is doing amazingly well. Revenues, as I say, for the second quarter was $1.79 billion and up by $706 million just in 2 quarters alone, or 65%, right? So I'm telling you that if you have the right strategy and you have your team, and you can finance your strategy, I think you can do very well. Gross profit, you can see there. I'm not too sure if you have it on screen. Gross profit is $771 million, up by $333 million just in 2 quarters of this year alone, or 77%. Net profit, almost $300 million in 6 months of the year 2022. That means we are up by 183 or 160% over what it was the year before. And somebody says the company Fosrich is doing 0.60 earnings per share for the year so far, or 161% above what it was. I think I was asked to tell you a little bit of the story, the journey. I think the journey, I would do it again and again and again and again. Thank you very much.
Yeah, man, Burrito, go and make you list another company. Watch it. Thank you very much, Mr. Foster. My market operations and trading team has indicated to me that the price appreciation, all things considered with Fosrich for year to date, is 350%. 350%. And as of September, the largest junior market capitalization is Fosrich. So, certainly the capital has been well deployed. Thank you very much, and congratulations, Mr. Foster. Okay, very quickly, I'm going to ask Mr. Lissant Mitchell, a mentor, independent financial consultant, who is experienced in financial services, spanning well over 25 years at the senior management and executive levels, with tenures at local, regional, and international financial companies. A proven track record in designing and executing long-term, sustainable, strategic actions, change management, divestitures, mergers and acquisitions, and share ownership privatization. Former Senior Vice President at Scotiabank, Scotia Group Jamaica, and CEO of Scotia Investments, former. He's responsible for and has played a role in the execution of share ownership transfers and privatizations with transaction values well in excess of $1.4 billion US. He also led the divestment of the government of Jamaica-controlled Pegasus Hotels Limited. Vastly experienced, and I would ask Mr. Lissant Mitchell, financial consultant, to give us his perspective on the role of the mentor. Yeah. Yeah, all right.
Good afternoon, everyone. I'm going to take maybe a couple seconds, right, and speak about Fosrich. So the story is, back in 2019, it may have been about October, early October or late September, I happened to be flipping through the television channels, and I saw Mark Croskery interviewing Cecil. And I spent, I think it was a half hour or 1 hour program, and I spent that time listening. And the following morning, I called my broker, obviously it was Scotia at the time, to buy shares in Fosrich. Of course, a couple of months after, you had COVID and so forth and so forth. Made one mistake. I didn't buy more. Anyway, all right, thanks everyone. Thanks for the opportunity to speak with persons in relation to mentorship. And the perspective I want to put on mentorship is partnership for sustainable business growth. Previous speakers spoke about the importance of listing and the value that it brings to their organization. And there's some obvious trepidation in relation to getting other persons involved to support that journey. And I want to kind of debunk some of that, but also highlight the benefit of mentorship. Help with this, the point here. All right, so speak a little bit about the mentorship program. Who is a mentor? Principal functions. Mentor is not a shadow director, importantly. Key partner and ally. Some noteworthy quotes and some takeaways. You have to help me with this. All right. So back in probably 2008, 2009, in the stock exchange wisdom, when the junior market was being established, they came up and they built out or defined a role as a mentor. And the fundamental purpose of that is smaller companies typically don't have the depth of a board, a broader board, the larger companies do. And they felt that it is important to have a person to be able to guide them through some fundamental important things, in particular governance. And as a result of that, one of the fundamental things included in the whole issue of junior market listing is to identify that person with the requisite skill, expertise to be able to provide that type of guidance. The mentor, in relation to the rules, obviously, unless the stock exchange agree otherwise, each company that is intended to list or during their lifetime of listing is required to have a mentor. And the proposed mentor obviously needs to be approved by the stock exchange. There's a list of mentors, I think it is on the stock exchange website, myself included and a couple others. And the stock exchange would have gone through and do, in their view, what they consider a reasonable, fair due diligence on those individuals. And they have to have, obviously, skill, knowledge, expertise, some amount of exposure in the industry, some amount of years of experience, and of course, integrity, honesty, and ensure that they are of themselves a reasonable, financially good standing. The core roles and responsibility is really advising the board on the establishment of adequate procedures, systems of control for the purposes of compliance with the good standards and corporate governance. Now, importantly, corporate governance, and we have a fair amount of expertise around, right, in this room, is very important to companies because it adds significant value. Earlier, Cecil mentioned once they got listed, a couple things happened: public visibility and the importance to provide frequent disclosure, whether it is your annual report, your quarterly report, but importantly, governance. And coming from the financial institution world, one of the things in assessing credit is the whole issue of your governance structure, your board of directors, your board meetings, how those things are conducted. So the mentor responsibility is to help guide and support the board of directors in having regular board meetings. I would recommend at least quarterly. It can be more frequently, of course, depending on the nature of your enterprise, but at least quarterly. The establishment of the appropriate committees. I think with the stock exchange junior markets, you have to have a minimum of 2, which is the remuneration committee and the audit committee. But you can have additional committees as you see fit. The required board committees and charters. Obviously, all committees would need to have guiding documents in relation to how you operate the board, these committees, the do's and don'ts and the expectations, the frequency of meetings, the chair of the meetings, and so forth. Due diligence prior to initial listing. I think Barita team went through, a number of things that needs to be done. The mentor who has the requisite experience can provide that support. So some of the things that you may seem daunting because the mentor has been around, has had experience with other institutions or other companies, they can make your life a little easier by providing that support, providing the guidance. And of course, if there's going to be material contracts and the impact those material contracts will have on your business, and by extension, the importance for what we define as public disclosure, the mentor with their requisite experience will be able to support you, support the board of directors, the company secretary in terms of how those disclosures are done, and good fiscal discipline. Each listed company, they are required to release their quarterly statement, obviously every quarter, within 45 days at the end of the quarter. So the mentor would be able to support you, guide you in terms of what that process looks like. Public announcement and timely disclosure. As a listed entity, it is extremely important for the credibility of the market, for the credibility of your company to be able to make public disclosures on a timely basis. Public material disclosures on a timely basis. We can't overemphasize the importance of providing information to the market, because what it does, it increases the level of confidence in your company, of your shareholders, it adds value, and it gives the general market a certain level of comfort about the credibility of the operations of the market, and importantly, support board's deliberation. Now, I think the next slide speaks to the mentor is not a shadow director in the capacity of a mentor. So while you may end up having a mentor being a director, a mentor by themselves, their role is not to be a director. That's just the guidance in terms of the rules. They add value, yes, in terms of the discussion and deliberations around the board table, but importantly enough, you need to appreciate that they are not required to do certain things, such as to make commercial decisions. That's the role of the company. That's the role of the executives of the company and ultimately the board of directors. The mentor is there to provide support, guidance in relation to how all of those things impact from a regulatory perspective. It's not required to really participate in the making of those decisions. But obviously, when you select a mentor that has significant experience in commercial operations and regulatory, they can add value to the discussion. Not required, but they can add value, and you want to appreciate the value that they can bring. However, that's not their crucial role in making those decisions. And obviously, as I mentioned, not required to act in the capacity as a director from a Companies Act perspective. I like this slide. I like this slide a lot. Mentor as a partner and an ally of your company. And a couple things. Trusted advisor. You want to have, obviously, the person that you can trust, you have a relationship with, you can interact with, you feel comfortable with as a trusted advisor. A sounding board. Again, when you speak to a mentor, and as I said, there are a number of mentors, you want to be able to bounce ideas off. Principally, because of the core role, it is going to be around regulatory, governance, guidance, public disclosures. However, mentors tend to be very flexible and supportive within the context of their particular role as a mentor. Accessible. You want to be able to reach a mentor when you need to contemplate something critical. For example, you may be wondering if a particular disclosure is required, whether it is material, it's not so material. There are general guidelines in relation to accounting as to what is material. I think it's maybe 5% of your P&L or 5% impact on your capital and so forth. But there are some areas that may be a little gray, and you're wondering, am I going to over-disclose? Do I need to disclose? You can bounce that. You want to reach out to your mentor and have that discussion and come to an agreement or an understanding as to what is required. The mentor have that experience. And the truth is the mentor can take up the phone and call the stock exchange and say, listen, give me your perspective on this. and get back to the company, the CEO, the chairman, the company secretary, as it relates to how to disclose. Business and company advocate. You want your mentor to be able to be a cheerleader for your business. Not because the mentor's primarily or principal role is supporting compliance from a regulator perspective. You want your mentor to be, applauding, supporting the company's ambition, what they're doing. And of course, alignment of interest in the growth and the success of the company. Oftentimes, persons see, the term compliance, and the term compliance could suggest, something to hamstrung you. We want to debunk that to a large extent. It is in relation to how do you align the interests, obviously, of your directors, your management team, but one of your greatest allies, your mentor, to ensure that you're on the same page, you're focusing on supporting the company to achieve its goals and objectives. Back in June this year, the Jamaica Observer had published an article, and they had spoken to a couple mentors. And just some noteworthy quotes. You have Wayne Ray, Tanya Waldron Gooden, and myself. And there are a couple quotes, and let's look at some of those quotes. What Wayne had to say. The mentor assists the board and management to identify gaps, weaknesses, risk within the business and its operations, then oversee implementation of appropriate actions and plans over time for improvement. That's coming from a mentor that has tremendous experience. I think Wayne may be about 4 or 5 companies. Goes on to say, the introduction of systems, standards, and best practice in the interest of all stakeholders allow the company to accomplish responsive management to the many moving parts in the organization that will ultimately impact the business and determine the success or failure in the long term. Comments from Tanya. The mentoring process offers guidance not only on satisfying the requirements of the rules of the stock exchange, but also provides support on corporate governance matters, especially in relation to board and committee structures. Companies should seek the guidance of a professional, one that shares your vision. This will create a natural relationship, will manifest into trust. To change one culture, it's never easy, it takes some time. And the mentorship process supports that. And my quote, the junior market mentoring process allows for companies that are raising capital and being listed to get access to experienced support in the area. Goes on, the appropriate governance, and this is very important, the appropriate governance framework for a company and its shareholder value creation are inextricable link. It enhances the level of confidence of its customers, clients, shareholders. It also supports improved accessibility to financing, Cecil, right, and other strategic opportunities such as acquisition, mergers, and the likes. So these are some quotes, and you can go through them and get an appreciation from the views of various mentors. So in closing, just to wrap up, a couple key takeaways. It is designed to provide companies intending to list support experience that they would not necessarily have access to otherwise. It is to advise the board of the company on the establishment of the adequate procedures, board committees, how the governance structure works. And again, importantly, a mentor in the capacity of a mentor is not a shadow director. Granted, you may end up having a person being both a mentor and a director of a company, but in the capacity of a mentor, they are not a shadow director. Trusted advisor, sounding board, and your company and business advocate with alignment of interests, accessible, and it's a partnership. So this is kind of, from my perspective, I'm a mentor of 3 companies, Fesco, Consol Bakers, and Indus Pharma. And my interaction with the companies, some of them I'm also a director, is to give that perspective from, almost an independent voice to support these companies in the establishment of their procedures, their rules, their guidelines, and to help to support the company in its ambition to continue to grow and develop. Thank you very much.
Thank you. Thank you very much, Lisant. Very comprehensive, a good segue into a short panel discussion, of which I will invite Mr. Michel himself to join us on the platform, Dr. Street Forest, Mr. Mahfood, Matthew Hogarth, a representative from JBDC, Melissa, and of course a representative from Burrito Investments. Please join us very briefly here where we can have a quick session as we wrap up. We have refreshments at the back, which I know we need to get to. One more. Run at it. Okay. Raul can stand. He's young and strong. Another chair coming. But thank you very much, panel. The first question I put would be to Dr. Street Forest, which is not a complex question, but it's a question that is often asked. When is a good time to come to the market to raise capital? We have spoken to a lot of people who said they're waiting for this or they're waiting for that. In your experience, when is actually a good time? Is there such a thing?
Well, there is always a good time. One has to look at the need for capital, where they are in the process of their organization. But people sometimes delay, and I want to probably point to that and to say that they have to get everything right before they can come to market, and that is not correct, because it is a process. Even having come to market, people are still developing their corporate governance structures, etc. So you are still growing. It's a journey. So do not look on the fact that I do not have all the ducks in a row, but look on what you want to achieve, the plans that you have for this capital that is going to be raised, and work at coming to market. That's it.
Thank you very much, because that is often, and people delay and lose opportunities, and we've seen it happen quite a bit. Melissa representing JBDC, there is an aspect of development of a company and its representatives which needs to happen in order to have them ready to be a public company, whether it is their governance structure, their technical capability. What does JBDC do in that regard? Because that is a big part of the puzzle that we have to understand. Having your capital ready, having your structure ready is one thing, but your experience and your knowledge is key. Is there more that JBDC can offer in this regard?
Okay, good afternoon, everyone. JBDC does a lot for MSMEs, so I'm going to try to summarize. We work with businesses from start, so from concept to market, with the journey being to exit for some of the entities on the stock exchange. We start our process by assessing the stage at which the business is at, and if it's not a business, the stage at which the entrepreneur or potential entrepreneur is at in terms of mindset. We do a lot of work at the mindset development level and then move into the operations. So we have programs that are tailored to the stage and level of development of the individual and the business. We organize various programs around that kind of development. So the assessment that we do at the business level looks at the entire business framework. So it's introducing them to the structure of how a normal business operates, from market research to strategic planning, product development, marketing and sales, and customer service, and the supporting areas of HR, IT, digitization, and corporate governance and risk management. So those things are introduced to the entrepreneur who is now on a journey to getting listed on the stock exchange. We emphasize market validation because of the stage at which they're at. They're looking into testing and validating. You have to have revenue and potential, and the product that you bring to the market has to fit. So we'll seek to find product market fit in the earlier stage of our program. We look at performance improvement in terms of the incubator stage, so strengthening their ability to generate more revenue, to improve their cost management strategies. We look at also accelerating what you need at this stage. This is where we start to introduce them to equity-based investors. So we don't take them to the stock exchange, the brokers will, but we introduce them to angel investors. So as a part of our accelerator program, we introduce them to angels in terms of those that are ready to pitch for equity-based financing. In terms of our process, we also introduce them to mentors, advisors. We introduce them to structures around operating a board. So most of them may not be at the level of establishing formal boards, so we introduce them to an advisory panel where we bring expertise, professional expertise in the areas of strategy, finance, legal, and so they are introduced to that. In terms of the training program, because we also have training and events that are aligned to the program, they're also introduced to introduction to corporate governance. So as a part of the boot camp, they would have participated in activities related to understanding what corporate governance is about and how to operate in that way. One of the things we emphasize at JBDC is for specialists to partner with us. So we have built within JBDC a consultancy registry, so getting expertise, especially in the area of finance, introducing them to getting their financial statements in order, getting the support of the specialized persons in accounting to strengthen those areas. So all across the areas of the business, JBDC can assist. I don't want to take over your program, so I'll just stop.
that you may need the assistance of JBDC. How do you factor that into the IPO journey?
Well, as advisors, we are really seeking to make sure that you are fully prepared, and like my colleagues would have mentioned, we want to bring a fit and proper company to the market. Now, the truth is, we have a tendency to deal with fairly mature companies and highly developed companies that we wouldn't necessarily revert to the JBDC to build that capacity. But the important question that was raised in terms of startups, I think, and younger companies, I think in the heritage of the junior stock exchange in particular, was really a conduit for those companies to really accelerate their growth. Now, as smaller companies come to us, and maybe even clients of our sister company, the Merchant Bank, Cornerstone Trust and Merchant Bank, we can see the value of directing said entities to a JBDC, right, to help with that kind of capacity building that is necessary. So, we go through a full rundown with the company, as my colleagues would have mentioned in our various meetings, to really see what it is you're selling, what is your organizational structure, and where do those gaps exist, and whether it be in-house or with our own advice or affiliated companies, or for younger companies that are in an earlier stage of development, JBDC certainly would be an option for that kind of advice.
Okay. Thank you. Thank you very much, Raul. Matthew, question for you. What is the involvement of the FSC along this journey? I didn't hear much of the Financial Services Commission mentioned today. Could you, based on your experience, just advise of what has to happen with FSC for us to get here as a potential listee?
Well, the FSC is as the name suggests, Financial Services Commission, right? So when you're doing an IPO, it's a public offering. So you're offering shares to every person from every walk of life, not just persons who may be accredited investors or sophisticated investors. So there is somewhat of a paternalistic approach to how they approach to their role. They want to ensure that the financials especially, they do look at other elements of the prospectus, of course, but they want to ensure that the financial information is accurate, it's sound, the analysis is sound, so that the investors and the public can make a decision that is sound. So not to say that they do not look at other elements of the prospectus, but their focus is financially based. And it's important to know that before you can publish a prospectus, the last hurdle is you need a letter of no objection from the FSC. So that is the last hurdle that you need to cross.
In the value chain, the last step really is the FSC.
Correct.
Okay, thank you. Listen, another question for you. You mentioned director, mentor. What is the formula to keep yourself ring-fenced then as a director to not cross that line? Do you walk to the meeting with your checklist and just to really differentiate? Because I think that is very important, the role of the mentor. But what do you have to do really to isolate yourself as a shareholder from the strategic direction of the organization?
Thanks for the question, Andre. All right, so I sit on Consol Baker's board as well as Indus Pharma board, and those boards I'm also the mentor. FESCO, I'm solely the mentor, right? Obviously, when deliberations are happening in relation to an entity that I'm just the mentor of, while I add value to those discussions, it is very clear that my capacity is that of a mentor, and there's no obligation, so to speak, or I am not able to vote on particular matters around the board table. And by virtue of your relationship and defining the role, that role is clearly understood. And as I indicated in the presentation, obviously because you may be able to add value in different forms of the discussion, obviously you will add value. In the capacity where I act both as a mentor and as a director, those lines are not gray. However, it is to a large extent very clear in terms of, when you're speaking in a capacity as a director versus when you're providing guidance in relation to certain regulatory matters.
Okay, thank you. Thank you very much. Just a couple more before I ask the audience if there are any, and then we can wrap up. The mention was made a couple times in the broker presentation about 5 years financial statements. Is that a minimum? Is that a maximum? What is the benchmark there? If a company only has 2.5 years, would you give that consideration as well? How long does the history have to be?
Yes, so we, if a company only has 2.5 years, if that's all that exists, then that's all that exists, right? But generally speaking, if you want to assess the long-term evolution of a company, we think of a 5-year financial window, right? At the very minimum, what we like to operate with is 3 years as a minimum, right? But that's as a bare minimum, right? But when you're really trying to analyze what established trends are, and just for financial modeling and valuation purposes, 5 years is really the sweet spot as the short end of what we refer to as long term, and especially because equity investments are indeed long term investments that we like to stretch. So, if you only have 2.5 years, the question is the business older than 2.5 years old, right? Because in that kind of situation, we want to bring you up to speed to probably get you to a bare minimum of 3 years of audited financials, right? But if the company isn't older than that, then you can work with just the actual age of the company.
Okay.
And then the projections are a different story where we like to give a long-term window as well.
Okay. Thank you. Doc?
Yes, just to add to that, if the company is 5 years or older, you will have to give 5 years financial statements audited. That is by the Companies Act.
Okay, by the Companies
Yes?
Act. Okay.
Okay.
One other question, since you have the mic, Dr. Forrest. Can startups list? How many has that ever happened here where a startup has listed and gone public?
Yes, we can list startups. I think Barita spoke to that. It is going to be based on projections because the company has not yet had any history. It is a more difficult situation because there is no history. But a good plan and also the management, there are some things that you're going to look at keenly when a company is going to be a startup. You're going to be looking on management, the board of directors. These are some of the things that you will look at to see whether you're going to be able, as an investor, to invest in that business, for shareholders, to attract shareholders to invest in that
have a story.
business.
You have to have a story. So, in the history of the Jamaica Stock Exchange, what's the fastest from start to finish when everybody came to us with everything as a company listed? In what time period?
I think we've had about 3 months. Yes, about 3 months.
So it's not
company,
impossible.
yes, a company can list within that time.
So it's not impossible, folks, for you to be listed in January 2023, if not before. Thank you, Dr. Forrest. Matthew, what is the process for converting a private company to a public company? What do we have to do? What is required to convert a private company to a public company?
It's rather simple. So just quickly, a private company, by definition in the Companies Act, is a company that has no more than 20 shareholders, right? And that discounts shareholders who are employees of the company as well. The stock exchange rules require that after your IPO, you need to have a minimum of 100 persons. You would have had to have issued shares to at least 100 persons, yes? Then the Companies Act says that once you have more than 50 shareholders, you must become a public company. So if you are to comply with the stock exchange rules, you must become a public company. So just so that you know, when people say you're going public, you can have a public company that is not listed. Eh? So we're talking about public listed the companies. But to answer you succinctly, no, that process takes the meeting of the members of the company by which they pass a resolution in which they decide that they're now going to convert from becoming a private company to a public one. There are other things that would be involved, of course, because there are other requirements that you would need in your articles of incorporation to be a public company. And also, while you're doing that, you'd want to consider there are certain rules. Rule 404 of the Jamaica Stock Exchange rules requires that you have specific provisions in your articles of incorporation as well.
Okay, thank you very much. John, I'm going to give you the call to action to the JMEA and other possible listees, and then after that I'll ask if there's any question from the audience, and then we'll close.
Say that once again.
Call to action, up to you. You want to inspire your members to walk right behind you, sir, and come to us.
Well, you know, we have heard a lot about the process. It still might sound a little complicated, but in reality, you go to you choose a broker, you meet the broker, and we talk about the public listing that you want to do, how much you want to raise, why you want to raise it, and providing in that initial meeting there is a sense from both people, the company and the broker, that it makes sense, it's the right time. They will then talk to you about all of these other issues that have been discussed, and you move from there, and the broker takes you along the way. He introduces you to a lawyer, unless you have a particular lawyer. There is 4 or 5 lawyers that have a lot of experience in these matters. And of course, there are other brokers as well. And they take you along the way. They help you prepare the prospectus. The lawyer starts not from the beginning, because there are a number of prospectuses that they use as a guide, and then they start to help you to fill in your information, your projections, your story, and take you along the route of helping you identify the mentor and so on. So once you make that initial arrangement, it's a pretty seamless process in getting your accounts up to date, getting your projections done, using your accountant. And of course, there are many accountants as well. Maybe, you know, people will know the big 4 or 5 in Jamaica, but there are others as well who have experience. And then they take you right through to the end. And as Marlene said, depending on your readiness, it can be 3 or 4 months, or it can take a little longer.
Thank you very much. Any questions from the floor for anybody on the panel? Dr. Henley Morgan.
Good morning. Every time I come into this space, I feel like I want to create wealth. That's amazing. But not only that, but to see that go right down to the base of the social, and economic pyramid. I have a question about mentoring. How formal is that arrangement? And is the contract between the company intended to list and the JSE, or is it with the mentor? And is there a financial aspect to that agreement?
Thanks for the question. It is in fact a formal agreement. Under the rules of the stock exchange, you're required to have a mentor, and the stock exchange in its rules also share the templates for mentor agreements. The agreement is between the mentor and the company, and there is in fact a commercial arrangement in most instances, but there's a certain amount of flexibility. The stock exchange does not mandate a financial or a commercial arrangement in the contract. What it does, it mandates that there is in fact a signed agreement, and in fact that agreement has to be submitted to the stock exchange as well for at least review, sign off, or concurrence or no objection.
Thank you.
A follow-on question, Andre Gordon, TSL, to the mentor. Is the mentor prohibited from taking a position in the companies that they are mentoring, if you are not a director, just a mentor?
Sir, as in, buying shares in the company?
Yes.
Well, the short answer is that all companies that I am a mentor, I have shares in the company. Right. That's the short answer. And, as I indicated in my presentation, there needs, well, it's not obligatory, it's not mandatory, but I think it is important for alignment of interests financially as well.
Thank you very much. I have a question.
Hi, good afternoon. I was just wondering, in looking at the profile of the investors across the JSE, can you just give us a quick breakdown of what it looks like in terms of institutional versus retail investors, and do you see a growth in retail investors?
Can you repeat the question?
Yeah.
In terms of the profile of the investors
Yes.
across the JSC, what percentage would you say is retail versus institutional investors? And do you see a growth in retail investors?
Definitely a growth in retail investors. So when you look at, say, let us say 15 years ago, you'd see 50,000 account holders. And of those 50,000 account holders, you would have, as you have asked, a mix between the institutional investors and also retailers. But what you have found, what you are seeing now, is that the market is understanding the value of investing in companies. And you are seeing a growth. So we are now from 50,000 investors to 280,000. So you can understand that there is definitely not a shift, but a total involvement of retailers in the market. And not only that, but let me just hasten to say that initially when you looked at the mix between the gender, male and female, that would be about 80-20. 80% male, 20% female. With our most recent listings now, you find that it is about 50-50. So as the same amount of male investing in the market, the same amount of female. So obviously you can see that the story is being told about wealth creation, that you can invest in these companies to gain wealth. And on the flip side, the companies are now seeing that there is a pool of persons out there that are willing to invest in their companies.
Thank you very much, Dr. Forrest. Yes, the last point is very critical. There is still capital out there looking to find a home, whether it is institutional or retail, all kinds. So there are opportunities. If you need capital to raise, there is capital still available. Any other questions? If there are none, I will ask Kamisha to just come and give us the wrap-up. Executive Director, Jamaica Manufacturers and Exporters Association.
I'll hasten to say all protocols observed because I've noticed that there are some gentlemen already converged around the food. It is my absolute pleasure to thank the people working behind the scenes who contributed to make this session a success. Likewise, those who are working assiduously to make this entire program a success. And when I speak of program, I'm talking about 30 companies to be listed on the junior stock market in 2 years. Let me say that again, 30 companies to be listed in. By the way, sometimes we say 50, so just in case. Now, access to finance continues to be a long-standing challenge, and we know that is a key area to ensure strategic repositioning of businesses, especially as we seek to maximize on opportunities. It is the mandate of the JMEA to provide technical support to our members, and that is why we would have signed this MOU with the JSC in April 2022. Just to note, the manufacturing and exporting sectors continue to perform positively. In 2021, we saw contribution to GDP being 8.9%. Value added increased 3%. Stocks in loans was increased by 3.6%. We see where brand Jamaica continued to be strong, where manufactured exports increased by 30.9% and other manufacturing export increased by 49%. Why I said this? It is because as we converge today to discuss this opportunity, we know it's exciting times ahead. We're here today to build relationships to ensure that we achieve the goal of 30 to 50 companies listed in 2 years. Can we achieve this goal? Most definitely. It is with your support as it relates to the brokers, the lawyers, the auditors. And we have been having discussions with you to ask you to just commit to this program. I'm speaking about the brokers especially because, as John would have been saying, the fees are something that it tends to turn off our companies from listing. So we ask for your commitment. Create something special for the JMEA members to incentivize to be listed. Now I want to especially thank my president, John Mafood, for his vision and passion to ensure that this program is a success. Being an avid investor myself, when I joined the JMEA in February of this year and was appraised of this project, I was extremely excited. But as I started working with John, I noticed that my passion and excitement was just a little tiny drop compared to his. John has personally called companies, sending emails, talking to many of you about the benefits of being listed on the stock market. And I want to personally say, John, your leadership is what is right about Jamaica. You not only think, but you bring action. And I'm very proud to lead a team to ensure that your vision is realized. Thanks to the presenters, your knowledge certainly enriched this session. Thanks to the sponsors, thanks to the brokers, lawyers, auditors, and especially the JMEA member companies who came today. Thanks to Dr. Street Forest and the team here at the JSE to partner with us to ensure that this session was a success. Again, what is the goal? 30 to 50 companies in 2 years. I encourage you, keep your energy high. Let's focus on the goal and just know that we are creating impact in Jamaica. Our work will increase wealth. And I know that everybody here is keen about creating wealth in Jamaica and ensure that we are growing our economy. The JMEA continue to be committed in strengthening our member companies, so please take advantage of this opportunity. By the way, what's the goal again? 50. I hear Andre say 50 companies in 2 years. 2 years.
Yes, a stretch target. Thank you very much, Kamisha. In closing, I would just like to thank everybody for participating and remind you that National Investor Education Week continues. You may join us tomorrow online at our Jamaica Diaspora Education Open House as we invite the diaspora into these sessions. That will be tomorrow evening. Our local investor education open house will be all day Thursday here and a hybrid actually. You can register online, and on Friday, the National Youth Forum. All available still for you to register online. Thank you very much for your participation and have a good rest of the day. Oh, and it's free. It's free.